Hello everyone, my name is Sofia Nuraini and I'm part of Group 2. Our group will discuss monetary policy and inflation effect on the economic in Indonesia. And Group 2 consists of Sofia Nuraini, Zipa Aprilia Putri, Christiana Frabuku, and Agus Darmawan. The discuss will start by Ziva.
Monetary policy and inflation effect on the economic in Indonesia. Abstract, this study aims to examine monetary policy in economic growth in Indonesia. This study uses a literature study method which is carried out by reading literature related to inflation, fiscal, and monetary policy, and the role of BI in dealing with inflation events that are sourced from literature, brochure, and the internet. Introduction. The main money-related event that we experience in almost all of us inflation. Inflation is a general tendency of costs to increase continuously overall and occurred for a long time or continuously. If there is an increase in price that only occurs for other product, it cannot be called swelling, but if the price increase occurs in almost all goods exchange in the local area and occurs along a significant area, at that time the condition is called inflation. Something to anticipate sustainable inflation is a borrowing cost strategy, namely increasing borrowing costs if there is an overrun. The increase in financing costs carried out by the central bank with big response by market players and financial bankers to take advantage of the second to expand creation and contribute. In addition, it will also affect the size of the creation to interest, and the labor force will also increase. Thus, an increase in trade and a reduction in the quantity of unemployment, so that for the trade entering the country strengthen the dollar against various forms of monetary. Similarly, if borrowing costs decrease, industrial production will decrease because production with limit losses. If the amount of production will delayed decrease, the currency will weaken. The increase in interest rates is very worried by creditors, and the declining level of weaken. The increase in interest rates is very worried by creditors and the declining level of housing sales because it makes tax on capital loans and house loans increase without being supported in the smooth production, and supporting business will have an impact. Okay. Literature review. 1. Bank. Bank is monetary intermediary institution that is generally established with a position to acknowledge stores, lend cash, and issue promissory notes or what is known as certificate receipts. The word bank comes from the Italian word banca, which means money changer. 2. Economic growth. Economic growth is an increase in the capacity of the economy to create labor and product. Thus, financial development refer to changes that are quantitative in nature and are generally estimated using information on GDP or per capita year payment. 3. Monetary policy is a policy carried out by national bank through controlling the supply of cash to achieve certain goals. And 4. Inflation is an interaction of rising costs in general and consequently an increase in the price of few goods alone cannot be called an expression unless the increase extends to different products.
Okay, next, the method. The method that the author uses is collecting this research is learning to write, which is directed by reading writing that is identified with inflation, fiscal and monetary policy, and the role of the Bank in Indonesia in recovering inflation, which is sourced from writing books, brochure, and the verb. Next, the result and discussion. According to Kashmir, there are two types of bank activities on interest given to their customer, including first interest on savings, second loan interest. Interest on savings is a premium that's aimed as an increase on compensation for customers who keep their money in the bank. Premium is the amount that the bank must pay to its client, for example, current notes, reserve fund interest, and store interest. Second, loan interest. Loan interest is the premium charged to borrower or the value that the client will obtain it has to pay to the bank. For example, credit income. Deposit and loan interest rates are a major part of the cost and payment factor for banks. According to Casimir, the determination of interest rate is determined by several factors, including fund needs, second desired profit target, quality guaranteed government policy, term company reputation, competitive product, a good relationship, competitive third party grant. Fund needs. The factor of the need for subsidies is especially explicitly for the reserve of investment fund. In the particular, what is the ideal financing need? If the bank is short of fund, while the down payment in increasing the bank's way of dealing with this asset in immediately. Second, decide profit target is a given for interest in advance. This is because the target benefit is part of one of the factors that determine the size of the cost of credit loans. Third, quality guarantee. Quality assurance is also carried out for credit purpose. The more liquid, certainly, or simple to cash is given, the lower the credit income charged and vice versa. Government policy. To determine either the reserve fund premium or bank credit income, it is not permissible to exceed the cutoff or roof set by the public author for this situation. Bank Indonesia. Um, Company reputation. Company reputation is organizational from the position of the organization also determines the cost of financing, especially for loan interest. The profit of an organization that will get credit determine the borrowing cost that will be charged later because usually an organization that actually has very small competitive product, the cost of credit financing is generally low when compared to less competitive goods. This is because the goods are competitive with a high turnover rate, so smooth installment are needed. Good relationship. Usually, credit increase is related to factor in individual organization. Banks arrange client between important clients and general clients. Nine competitive or competition. Rival is a unsafe condition and banks are short of funds while the level of competition in finding reserve deposits is very close. Banks need to compete fiercely with different banks. Third party guarantee. For this situation, the party foreign guarantee to bank will bear the risk borne by the credit reciprocal recipient. Usually when a meeting provide a bona fide guarantee, but in terms of ability to pay big name and loyalty to the bank, the premium charge is also very high and first. In implementing the money-related approach in Indonesia addressed to a structure known as the inflation targeting framework, this structure has been officially implemented since July 2005 after previously using a financial strategy that used best cash and the purpose of managing money. Element affecting interest rate according to Harjoyo Wignyoto and factor affecting financial costs among other public perception, time frame preference. Second, the effect of the technology of on implementation. The whether the use of innovation that are more skilled the individual works and the lower the concept lower and broader. Third element of urgency time to get funds. For public fund, uh, in situation where funds are very low while market demand is increasing, all things considered bank financial costs may be expenses. The different components that can contribute to high borrowing costs include there is inflation, second monetary authority, third, corruption and collusion. For urbanization rate, 5, ideal utilization of product capacity in Indonesia, and 6, failure in the business world. Due to the high cost borrowing that affect company monetary problems, first, foreign asset enter to get benefit level. Two, the community economy is holding back due to rising borrowing costs. Third challenge in building a business due to high financing costs. The impact on the economy of falling borrowing costs are the country will face a pie cut. Uh, Second, the emergency of inflation. The conclusion, the phenomenon of rising borrowing costs with a declining stage is highly expected by various parties because the current high cost of financing in Indonesia is very difficult to track because the regulation includes different parts of monetary movements in Indonesia. Many experts say it's difficult to achieve the best condition, but the setting of it has many advantages and disadvantages. The arrangement identified with high borrowing costs are: first, reducing borrowing costs; second, constant improvement in related and native money frames; third, to contain inflation. Overall, hope that the implementation of Indonesian finances can be carried out well and can increase government assistance from individuals with a steady reduction in borrowing costs so as to facilitate monetary exchange in Indonesia. In, Indeed, the increase in financing costs is useful for holding assets from abroad that can be used as a source of asset to contribute. It is recognized the financial approach is an important part of the macroeconomic strategy. In line with that, money-related arrangements are directed to support the achievement achievement of macroeconomic target. This goal will be as achieved maximally, and meanwhile, or accordingly, a financial strategy is needed to accept a truly high monetary development, low unemployment and expansion and development rate, and the achievement of a truly stable installment balance rate. Thank you. That's all from us. Thank you. See you next time.